What are your thoughts on the article on borrowed money in the market that you posted this morning? Yeah, that's interesting, right? Essentially, what the article is implying, and the reason I posted it, is that when that many people start to leverage up, when it becomes a statistic, that usually means that there's too many people speculating. They use comparisons back to 2007, 2008. They also go back to comparisons of leveraging up in 2099 into 2000. The article doesn't flat out say it, but they're absolutely implying that much leverage with that many people leveraged is a recipe for a crash. Again, crash is very relative these days because crashes reverse in one day. But I will tell you that I think a lot of people got involved. I don't even think. I 100% know because there's just stats about it all over the place. A lot of people got involved in full-time trading in March of 2020 when the pandemic was just, you're not leaving your house, and Zoom really wasn't in place for a lot of people and all that kind of stuff. I think the world and the markets are getting back to normal. And I think some people that made easy money, let's just say from April through August of last year, probably got a little bit ahead of themselves from believing what their abilities were. The market's kind of settling back in right now, and we're seeing a normal market of back and forth and pullbacks and rallies and sector rotation a little bit more better this month. I don't think it's smart for inexperienced people who've never traded before to be on massive leverage, as that article implies. I don't think it's smart. And I really believe that, look, I'm doing this a long time. I've made some money, I've lost some money, and I've seen thousands of people based on how long I've been doing this, since 2001. Leverage and inexperience is a recipe for disaster, an absolute recipe. I could tell you stories, which I'll tell you when we all get together. I could tell you some stories about how fast people lost their money that I've traded alongside over the years, simply because they leveraged themselves to the gills without any experience. And this is even worse, I think, because a lot of people really believed that their stock picking prowess was them and not the stimulus fueled pandemic rally that it actually was. I mean, if everybody here has been in the community, especially in last August, to be exact, July into August and August, we don't have the chat scroll anymore, but I will tell you 100%, there was myself, Jerry, Chris Forrest, a couple of other members in the community that have been around trading for a long time. Every single one of us were saying this is getting ridiculous, where the market couldn't even go down for an hour. And you saw that at the end of August, the market topped out. And a lot of people, especially a lot of aggressive people trading Tesla here, look what happened here. It was, how can I even word it? Like the rally in July and August was almost silly. That's how little it pulled back. And then in this period here, especially August through October, and maybe even a little bit longer, there were a lot of people aggressively trading Tesla. That I know for a fact because they're in the community. And when Tesla was rocketing higher, they were leveraging themselves with options. When I tell you share size or option contract size, numbers that would scare me. And people who'd never traded before and blew up their accounts in 3 weeks. 3 weeks, because their entire strategy was the market always comes back. Yeah, maybe it went higher after that, but can you sustain the leverage during that period of while it's coming back down? I don't think it's smart. As a matter of fact, I think a lot of really smart traders who have a really good chance of doing this and making it a really good part of their annual income. I think a lot of people leverage themselves up too hard. I think a lot of people, and this was discussed this morning in Slack, a lot of smart people trade too big, too fast. And then they say, oh, trading doesn't work. And it's not that trading doesn't work. You didn't even give yourself a chance to learn how to be a trader. And that's just reality, and that's why you'd be surprised how many programs like ours, and I'm not patting myself on the back, I'm just telling you flat out, how many programs don't talk about share size, conviction levels, position sizing, profit targets. I don't want to say anybody's names, but I know for a fact there's one group out there that This guy's really, really well known. He doesn't give any entries. He just says this stock's hot, that stock's hot, this stock. That's not trading. That's not trading at all. I mean, we have every member of our community focusing on profit targets and whether or not the risk is worth it. That's real trading. So without sounding like an advisor, obviously I'm not. So Matt, thank you for bringing up the conversation. If you work hard and don't trade too big until you have a track record, you have a really good chance of this being something special for you. The way I always talk about it and the way I taught traders on my trading floor is I would say that, look, if you opened up a business and I remember that I've been telling this story for years. If you opened up a business and you have a good week, you don't double your office space because you had a good week. And traders do that. They had a good week last week, or they had one good trade. And they're like, oh, you know what? Now I'm going to trade 2,000 shares per trade because I had one good trade last week, or I had one good week, and they don't have a track record yet. Your business needs to have consistent revenue before you expand your office, before you expand your inventory. And obviously, if you're not understanding what I'm saying, I'm talking about expanding your inventory, expanding your office means doubling your share size or trading with more leverage. And I'm telling you, I'm doing this a long time, which is why I get passionate. Is why I get loud. I get loud because I've been through it, and I want to shake some people and tell them I know what I'm doing. I absolutely know what I'm doing because I've been through this with thousands and thousands of traders in my own firm and people I've traded with. You got a shot. You got a good chance of doing this for a long time as long as you manage risk and share size while you're still learning. It's when you try and trade too big, too much margin before you have a track record. That's when it becomes you're not giving yourself a chance to learn the skill. Okay, that's a big deal. You got to give yourself a chance to learn the skill. All right. So that's it. I think that's all we had on the swing trade stuff for today. But good job, both of those guys, Andrew and Franz, for having those trades existing. Good job taking action right away. Jack, I do not have anything on leverage. Leverage is such a personal thing. I'm actually not comfortable talking to somebody about leverage. I much prefer to say track record and imply that you should size up or trade with leverage when you have a track record. And by the way, when I'm talking about a track record, I'm talking about at least 3 months of profitable trading. At least 3 months of, it wasn't July and August of 2020. And I made money in September as well. You have 3 months consecutively where you made money. That means you know what you're doing. That's when it really starts to turn around. That's when you have conviction and you wake up and you're like, I'm expecting to make money today because I know what the heck I'm doing, not because the market's giving me a gift. And that's a great place to be when you wake up every day expecting to make money and it's just a matter of follow through. Let's see, James, been working on this for close to a year. I have an account with leverage and I've never used it. Probably a smart thing, James. Again, I hope you're taking to heart what I'm saying. If you're working hard and you're listening and you're asking questions, you got a really good shot at making this something special for yourself. You should never trade bigger unless your trading account screams at you, yeah, we're doing it. We know what we're doing. We can manage the downside. Now we just need to learn how to hold the winners. That's the right way to do it. It's the right path. It's why every classic trading book that you've ever read, all of them talk about scaling into positions. Nobody goes into positions with giant share size. Nobody. Only idiots on YouTube who are 19 years old and don't even know anything about trading. They're following somebody else's trades and making themselves sound like they're geniuses. Yeah, I said it. I said it out loud. We live in the real world. We live in the real world. All right, everybody, let's head back over to the room. Let's finish up, have a strong finish to the week. All right, everybody, I'll see you in a bit.